Nigeria has issued a $1.25 billion 7-year Eurobond in the international capital market at about 8.4% per annum. Meanwhile, the Debt Management Office also says Nigeria's total debt stock stood at 39.6 trillion naira as at the end of December last year. Odinaka Linus-Nwokonkwo, the fixed income dealer at Access Bank, joins me now as we discuss these stories and more impacting the fixed income market here in Nigeria. Thank you so much for your time today, Odinaka. Let's first get back to that Eurobond issuance there. And what does that say about investors' appetite for Nigeria's debt instruments?
Yeah, so Nigeria, yesterday, the DMO issued a Eurobond about 1.25, like you said, which closed at 8.375. Our subscription was about $4 billion. And the DMO clearly stated that this was to bridge the infrastructural deficit and also to boost the reserve. So clearly, what you say yesterday was a bit of a in the Eurobond market, they try to bridge that infrastructural deficit with the issue, with the volume they issued.
Yeah, but how much of significant impact do you think this is going to have on the reserves?
It's about $1.2 billion, so it's probably a $1.2 billion increase.
All right, but looking at the DMO giving more clarity there on the debt stock here, we're seeing that in dollar terms, that amounts to roughly about $9 billion when compared to 2020. I'd like you to speak to what we're seeing play out here, and the debt to GDP ratio at around 22.4% as stated by the DMO.
No, can you get that, please?
Your thoughts around the clarity we're getting on the debt stock of Nigeria?
Oh, okay. Nigeria has issued a lot of debt recently in the recent past, considering the deficit we've seen. This year, we have a budget deficit of about 6.4, and with the cancellation of the subsidy removal is about 7.4 trillion. So we are looking at that also increasing, and that's part of the reason why the DMO had to go into the debt market to issue the Eurobond, considering this kind of infrastructure, considering this kind of budget deficit we have.
But looking at sentiment in the market, though, how is the market interpreting all this information, and what's driving sentiments today?
Market sentiment really currently is driven by liquidity. What we've seen, for example, this week, what we've seen play out was a bit of calm at the beginning of the week, but due to the coupon payment of about 185 billion that came into the system, and also the almost maturity of about 99 billion, we've seen a bit of a buying sentiment on the bonds across the mid-tenor, 2036 and 37, traded around 11.85 and 12% handle. Also, we saw the DMO on Wednesday issue the NTB auction, where they borrowed about 172 billion. 364 billion was what was the subscription, and only 58 billion was on offer. So we saw the stop rate close around the 1.74, 3% and 4% handle, which is a decline across the three tenor curve, which is 1 basis points on the short, 28 basis points on the mid, and 10 basis points on the long end of the curve.